Welcome everybody to our third and final episode, our third and final installment of our lecture series featuring professors and other professionals from the University of Haifa, called From Digging Up to Starting Up to Scaling Up. Today, we are going to focus on starting up and scaling up. And we're going to move away from the ancient world and some of the terrific discussion that we had with Professor Ayelet Gilboa, the archaeologist from the University of Haifa, and Amir Vilensky, who took us on a terrific tour of the Heck Museum. And most of you who registered for this series should have already received the links to the videotaped, to the recorded discussions that we had in the prior two episodes. And once again, you will also receive a link to today's session as well with Professor Bental. So Gary, if you don't mind bringing up the slide, thank you, and go to the next one. Next two, if that's okay. Thank you, next one. I just want to give you, as I have done over the last few episodes, an introduction to who we are at Israel Investment Advisors. And we are very honored to collaborate with the American Society of the University of Haifa. Israel Investment Advisors is one of very few investment companies focused on the Israeli stock market. And since 2010, we have run a fund called the Israel Investment Fund, focused on Israeli stocks. Unlike many other funds in America that focus on startups, we are very much focused on what Israelis are now calling scale-ups, profitable companies that have achieved a degree of maturity and are now publicly traded either in Israel on the Tel Aviv Stock Exchange or on other exchanges like the New York Stock Exchange or the NASDAQ. We are a subsidiary of a larger company called GHP Investment Advisors, and we are very honored today to collaborate with the American Society of the University of Haifa. Move forward, please, Gary. Gary. Thank you. As I just mentioned, I'm the president and portfolio manager of the Israel Investment Fund and Israel Investment Advisors. I have been following the Israeli market for about 30 years, and Professor Bental and I are going to have a conversation that may span that entire 30 years, if not more, to see how Israel has evolved over these decades to come to where it is today economically. And we are very honored to have Professor Benjamin Bental. He received his PhD, he just told me, from the University of Minnesota. And although he grew up in Haifa, when he first arrived in Minnesota, that was certainly a shock to the system, arriving there in the winter. And as a result, he has a good understanding of what the United States is also all about as well. He is a former member and chairman of the economics department at the University of Haifa. He's head of the macroeconomics group of the Taub Center, respected think tank in Jerusalem. And his primary research has focused on macroeconomics and economic growth. And we're going to talk today about economic growth in Israel, the macroeconomy of Israel, and the future of the economy in Israel. Before I turn it over to Professor Bental, this is going to be a discussion. I'll ask Professor Bental some questions and have a dialogue regarding some of these broader macroeconomic topics. But I also invite you to submit your questions through the Q&A function on your Zoom app, and I will feed those questions to Professor Bental as we progress. So without further ado, Professor Bental, let me turn it over to you to begin the discussion about the Israeli macroeconomy.
Okay, thank you very much, and thanks for having me. And since I know that Mike Stutzer is in the audience, I cannot avoid, and you mentioned these early days in Minneapolis. In some sense, Mike has certainly psychically saved me in these early days when I came right after a major blizzard, totally unprepared for this terrible winter scenario. So thank you, Mike, and it is a pleasure in particular to have somebody in the audience whom I know. Okay, so my plan is to give you a brief introduction, something like around 10 minutes, in order to set the stage in some sense. I will present 5 slides, which I think are really summarizing the economic history of Israel. And you will see, right, I mean, the main points that I'll bring up, which again, can lead very easily into the current situation, which is not part of these slides, subject to the coronavirus, and other topics that might be of interest. So if I may have the first slide. Okay, so of course, this is the most important part of the story, namely Israel's population. So you see the evolution of the population since 1950. Essentially, this is the earliest that we have really reliable data for. As you all may know, and maybe may have discussed the situation in 1948, during the War of Independence, there were about 600,000 Jews in Israel. And again, you see that already in 1950, there were about 1 million. And then this first ellipse around the first couple of years are, of course, an indication of the massive immigration of people, both in particular, of course, of survivors of the Holocaust, but also some already arriving from Arab-speaking countries, in particular Iraq. And that was, of course, a very, very, very difficult period. Again, remember, just a couple of years back, there was a major war, just 600,000 people. So you'll see that the population has more or less tripled within 3 years. And of course, or 4 years. And of course, there was no infrastructure, right? People were living in camps and all kinds of sort of improvised housing, very, very poor conditions. There were no jobs, there was no infrastructure, no industry, basically, a very difficult start with very, very dire economic situation, no foreign currency. So, we are talking about something that looks, for me, I was already born at the time, I have very, very dark memories. It is something that when I talk to my students about, they can't even imagine what it looked like. And then you started, to see a steady growth. And the next big blip is, of course, the immigration from the ex-Soviet Union. So there you already talk about an economy that is, fairly well established and has essentially no problem absorbing about almost 1 million people within, again, 2-3 years, adding, roughly speaking, 20% to the population, again, within this very short time. And the amazing thing is that I won't show you the data, but if you look at the labor market data, you simply don't see this immigration. They were absorbed very easily and very quickly into the labor market. And actually, you see, the population growth has even accelerated later on. This is partially due to the Haredi community, which I need to talk a little bit about because this picture stops in 2019, and the projection for Israel, right, which has now exceeded 9 million people for the about middle of the or end of this coming decade, is to have almost 15 million people, and the population structure is going to be very, quite influenced by the fact that the community that is growing very fast is, of course, that of the Haredis. So again, by the middle of the century, they are projected to have something like 30% of the population, which is of course much more than they are today, which are 10% of the population. And that may have very deep implications for the growth prospects of Israel because of human capital issues that we may want to discuss later on. But let me stop with this
Professor?
slide.
Sorry, just to interject, just so for those people who are unfamiliar, Haredi means the ultra-Orthodox Jewish population, just so that we can clarify some of your terminology. Sorry about that. Go ahead.
Right, and I'll be happy to discuss a little bit more, why they are so unique in this scene of the Israeli population. By the way, then right now we have an Arab population of roughly speaking 20 to 25%. That is going to stay stable. So the growth of this special community, right, this Haredi community, comes at the expense of secular Jews, or let me call them mildly religious Jews living in the country. Okay, so let's move to the next slide. So here we come to the economic performance of the country. And essentially what this picture shows you is the GDP per capita. This is on what we call a logarithmic scale. So the logarithmic scale enables us to look at growth rates very easily. But the scale, when you look at the left scale, this is really dollars in 2015 prices. And the comparison is to the performance of the United States. So this is this gray line on top of the broken blue and sort of whatever it is, orange line. And what you see is that the United States, and this is a well-known phenomenon, has been growing in per capita terms, basically since World War II, and actually even before that, at a very constant pace of 2% a year on average. Of course, you see some wiggles there, right? I mean, you see also the effect of the 2008 Great Recession in the data, but let's ignore these things, right? I mean, the long run is 2% a year. When you look at Israel, it started, of course, way below the United States, and just as any poor economy that starts developing, its growth rate is very, very fast. And this indeed is typical of the basically first 25 years of the economy. So again, you see some dips. Let's ignore them. And just see the average growth rate, which is the Chinese growth rate, right? About 5.4% per year on average over that period. And of course, that pace brought us very quickly into the range of something like 2/3 of the United States in per capita GDP. And then something happens. So in 1973, as you probably all know, there was a big war, right? The Yom Kippur War, coupled with an energy embargo, which was imposed on the entire industrialized world, and again, causing a recession in the entire industrialized world. But of course, who remembers that today, right? So we are talking about something that took place almost 50 years ago, half a century. And yet, Israel got stuck, and this is a phenomenon that a lot of people are aware of and nobody has a good explanation for, at a rate which is even slightly below that of the United States. Again, on average, and again, you see it's constant, of about 1.9% annually. And that keeps us at a fixed distance from the United States, right? So again, I mean, right now we are about 55% or something like that in per capita GDP relative to the US. And this is, of course, a situation that is not okay, right? We should have closed the gap and become much more similar to the industrialized European countries, which are at about 80% or a little bit more of the GDP per capita of the US. Okay, so let's continue. Next slide, please. This is a picture, again, that for many of you may be a little bit odd, but I think it is really essential to show that as I say, one of the key features of the Israeli economy. So what it shows is the export and the import of Israel relative to GDP. So it's all in percents, where of course the export is this indigo line, and the import, sorry, the export is the purple line, and the import is this indigo line. And you see the initial huge gap, right, of imports over exports. That was, again, that period that I was mentioning before. I lost the slide. Let me continue, right? The slide disappeared.
They'll bring it back.
Okay. So, so that was this early period when the economy was in really dire existence problems, without foreign currency to bring in the basics. So we're talking about food, and we're talking about, of course, oil and energy. So really, and medicine, everything, right? Everything was in very short supply. That was a period when the aid of Jewish communities, in particular in the United States, was essential. And of course, that was also the background against which Ben-Gurion decided at the time to make the reparation agreement with Germany, not because he liked Germans, but because he thought that without that, Israel will not survive. So again, we don't see this picture, but the point of that picture is to show that the situation has totally been reversed, right? Israel, instead of being in dire need in foreign currency, it is now generating surpluses, right? It is exporting more than it is importing. So this is a huge change in the environment in which the economy functions vis-a-vis the rest of the world, right? So it is, in this sense now, independent of, not independent, it is still trading, but it is independent of donations in the short run for mere survival, right? It can function, and it can finance its own way in the international markets.
Professor, to what extent was that due to the transformation of the Israeli economy, or in particular Israeli exports towards high technology?
That's exactly the next slide. So let's see that.
Looks like we fixed the technical difficulty.
Right. So this is the really the sort of key to this riddle, if there is a riddle, right? So Israel started becoming a high-tech nation somewhere in the late 1980s, beginning of 1990s, and you see in this picture the very quick increase of the share of the high-tech industry in industrial export. So from, I mean, had it gone back to the 1980s, it would have been something like close to zero. Then, of course, it goes very quickly from 30 to about 50%. This is where it is now, a little bit up, a little bit down, right? And this is indeed the big source of foreign currency. This, by the way, includes, by definition, right? Export includes also sales of companies. So exits are also counted in here. It's not only the sale of goods or services. It is also the sale of companies that enters this. So in Israel, in a sense, is selling its know-how. There are people who think that this is not a good idea, but this is the way it is, right? So this is how the market works. The country seems to be too small to sort of really create its own industrial base and turn the ideas into goods. So it is selling ideas. Okay, so then the next slide, which I think is the last one. So here is, again, as an introduction to where we are now with the onslaught of this, this world pandemic situation. So we have a little bit of public finance data here. And so you have two curves. The red one is indicating the national debt, public debt of Israel relative to GDP. And the blue one below is the government deficit, also relative to GDP. And of course, the striking one is the red one, where the debt is constantly going down right, in a very, fairly consistent way, and arriving in 2019, just as this situation has emerged at, roughly speaking, 60% of GDP. So this is very low by world standards, much lower, of course, than the situation in the United States, which gave some space to Israel to conduct itself and sort of find its way in the world capital markets in order to finance the needs that are now, of course, coming up in a big way because of the economic disaster. The somewhat less happy part is the recent re-emergence of government deficit. So we entered this crisis with a 4% deficit, which of course means that with the needs that the country is facing now, we're going to face very high government deficits in the couple of years until this emergency situation subsides. But again, the good story, or the good part, or the good news is that we have an easy way raising capital in the international capital markets at very, very low interest rates. So I think this is by way of introducing the background where I wanted us to be in order to enable now a discussion.
Terrific. Thank you for giving us a very excellent outline. Let me start with a couple of questions related to the graphs you just outlined. One of the things you mentioned was that after an initial period of very high growth in the 50s and the 60s, that Israel stagnated in the 70s, the early 80s, but then once growth resumed, it didn't accelerate back to the levels that were experienced in the 50s and 60s, but it did grow fast enough to elevate Israel from, call it a middle-income country to a high-income country, but not enough to catch up to the United States. Do you think, number one, do you think that Israel can catch up to the United States in the future? And number two, if not, what's holding Israel back?
Okay, so let me just refine a little bit your statement. There is another picture that I could have shown, which is Israel's relative position among the OECD countries since the mid-1990s. We were not yet members of the OECD, but I sort of looked at it. We have not changed our relative position. So it is not that we have suddenly emerged, right, and sort of entered the club of the better-to-do countries of the world. Relatively speaking, we have been in that situation again almost since the 1970s. So the relative situation in this respect, again, we are talking about a particular group of countries that were members of the OECD already in the mid-1990s. If you add countries that have joined the OECD since, then the situation is even worse because some of them have overtaken us. So this comes back to your question of whether we have the potential to do better. We definitely have the potential to do better. So let's put that aside. And so we need to indeed focus on the obstacles. And the main obstacles that we are facing are those of the quality of human capital. So the high-tech sector, which is really, really excellent, right, and is the locomotive of this economy, and is really giving it the rate of growth that we have seen. Without it, it would have been much, much worse. The share of the high-tech sector in GDP in Israel has also stayed constant now since it has sort of grown, right? So we saw that it was growing in the 1990s. So from the last 20 years, since 2000 and onwards, the high-tech sector has not grown relative to the rest of the economy, very, very little. Also, employment shares, right, it goes together with the same thing, have not grown. So despite the fact that salaries in the high-tech sector are double on average those of the rest of the economy, right? Where you would have expected that a lot of people would start entering the very lucrative jobs in the high-tech sector. This has not happened. And this has not happened because simply people don't have the qualification to do that. So the main problem is, as I see it in Israel, is really providing better education and better qualification for most of its population to enable it to indeed become very, very highly productive, and then, of course, join the top echelon of the OECD countries.
We've had a few questions. If you can give us some of the background data, how big is Israel's economy? You mentioned, for example, GDP and GDP per capita. What are those numbers today? And how do they compare to the US and the rest of the world in terms of dollars?
Okay, so again, Israel has 9 million people. So, right, so the US is what, about 340 million, something like that?
330 million.
Right, if I remember correctly, right? So of course one has to take that into account. So under the best of circumstances, we are a tiny economy relative to the rest of the world. And therefore, of course, looking at total numbers doesn't make much sense. And therefore, of course, we all the time normalize for the size of the population, not to compare a 9 million economy to an economy with, again, 330 million, let alone 1.3 billion like that of China. So I think this doesn't make much sense. We are right now, as I said, a little bit above the level of per capita in GDP in the United States, which again depends what price level you are using and how you are making these international comparisons. Roughly speaking, we are, if you want to be very, very generous, we are at about 40,000 per person, US dollars, current US dollars.
And one of the reasons that I think that's interesting is I understand what your perspective regarding the ability of Israel to catch up to the United States. On the other hand, if you look at the world, there are only about 10 countries on the planet Earth that have GDP per capita of $40,000 or more. And there's only 25 countries on the planet Earth that exceed $25,000. So, and yeah, there's this concept of, economists call it the middle income trap, where countries like China or other emerging countries, Mexico, Brazil, often have periods of high growth. And then when they get to about $10,000 income per capita, or $15,000 maybe, they stagnate. Well, Israel didn't catch up to the United States, that's true, but it didn't stagnate either. What are your thoughts about that perspective?
No, I agree. And again, so the numbers, there are a few more countries that again, as I say, we are more or less in the middle of the OECD. The OECD is roughly, I forget, about 34, 35 countries. And it doesn't include some of the richest oil countries, and which are not industrialized, and therefore they are do not belong to this very prestigious club. But the mere fact that we do belong to this club, and this is, by the way, the doing of Stan Fisher, whom you mentioned earlier before we became public, that is indeed, a certificate of good behavior, no doubt about that. And certainly, right, we do belong to the OECD, right? We cannot take that away from the achievement of the economy. Once more, it is due to a large extent to a very small sector in the economy, right? So this high-tech sector is responsible for a lot of these goodies. And this is a shame, right? Because it is employing less than 10% of the population. So you see the potential. And you see that this is an unused potential, in some sense, wasted potential. And this is, I think we should look at this way, right? Why aren't we higher? Not why are we not lower, right? This is at least the way I would like to look at the data and at the situation, given the potential that I see here.
Right. So somebody in the audience asked about the size of the stock market. I'll just mention that starting at the period that Professor Bental is referencing, which is the mid to late 1980s as our starting period, the Israeli stock market was worth at best $20 billion. And today, it's closer to $225 billion if you include Israeli companies trading outside of Israel, for example, on the NASDAQ. And that's down because the market in Israel, just like the other markets around the world, declined. Which leads me to a transition question because, you know, Israel began its life as a socialist country where the government and the Histadrut, which is the major labor union, in a de facto governmental institution back in the earlier part of Israel's history, those entities controlled about 2/3 of the Israeli economy until the 1990s. And then Israel began to privatize and inject more competition into its economy. So my question to you, Professor Bental, is as the capital markets grow, the stock markets, the bond markets, and as Israel has transitioned to a more private economy and with more competition, don't you think that that will be a spur to future growth? Or do you think that other factors are more important in this catch up to the frontiers of the global economy?
I think these things are inseparable, right? So they are very deeply intertwined. The economic history teaches us that, I mean, some people claim that the emergence of capital markets in Britain preceded the Industrial Revolution. I guess historians are debating this, but it makes sense to me, right? So first of all, you need the institutions to be able to indeed raise capital and put it to good use. And you are perfectly correct, right, that this was a major reform actually a little bit earlier on. When I teach the history of Israel's economic history, I always say that the country was refounded in 1985. That was really a turning point after the end of the huge inflation, when the government suddenly realized that the economy needs to be directed by professionals. And actually, the name of Stanley Fischer came up already. One should mention him also then, because he at the time was representing the US government, which came in order to aid Israel coming up out of that very, very big crisis. And he was sort of advising the Bank of Israel, but of course was totally in line with the governor of Bank of Israel, right? So he came as an outsider, but of course was an insider from that point of view, in order to engineer huge reforms at the time, which were really the backbone of what we see today, also in the capital markets as we know them today, in foreign currency markets, et cetera, et cetera. So this is an essential precondition to indeed allow the economy to find its strong points. Right? This is the role of a capital market. This is, I guess, what you are doing on a day-to-day basis. So yes. Now the question is, as an investor, I guess, and I as a citizen of this country, how do we find these resources? Where are they that we are really deserving the investment of capital, right? And of course, this is where I say we are a little bit in trouble. So the tools are there, right? And the opportunities need to be sort of created.
Let's turn to the current situation for a minute. Gary, if you can go back to the chart about the debt, because I think that really displays very sharply the transition that Israel is going to have right now. For the last, your chart here very clearly shows that Israel has pursued a very conservative policy when it comes to debt and deficits for 30 years. But obviously the coronavirus situation is changing things, and it's going to be much bigger than you even display on this chart. Can you give us a sense of what the coronavirus situation and the shutdown will do to Israeli government debt and what you think the implications are of that switch.
Okay, so again, this is indeed what I wanted to lead to. So the projections for 2020, right, are talking about a growth rate of the economy, not per capita, of -6%. So that means -8% on per capita terms, because the population is growing more or less at 2% a year. So this is the projection of the Bank of Israel, also of the OECD right now, concerning Israel. And the projection for 2021, if everything goes more or less well, right, with the assumption that some kind of a medical solution will come about, is a growth rate of, roughly speaking, 5% in 2021. So again, in per capita terms, we are going to have about 3%. So overall, we will not be back to the situation of January 2020 yet. It will take maybe another year to come back to that level. So this is where GDP is concerned. Now, of course, all of that has very important implications for these ratios that we are looking at here, because the GDP appears at the denominator, right? So if it is growing, even if the government debt is not changing, then of course the ratio of the debt to GDP is going to go down. So the issue is, of course, sort of a race between the numerator and the denominator, right? So how much more debt is the government going to raise in order to finance the needs of the economy when it is sort of slowing down and when taxes are not being collected because simply businesses don't function, and how fast the economy will be growing. So again, right now, the numerator certainly grows fast and the denominator shrinks, relatively speaking, fast. So the projection for 2020 is that we are going to reach a debt ratio of something like around 75%. So this is sort of looks like a realistic projection. So that means another 15 percentage points, right, relative to where we have been. And there will be an additional, roughly speaking, 5 percentage points in 2021. So by the end of 2021, Israel is projected to have a debt, again, under a reasonable scenario, of something like 80%. So as of that point, hopefully, growth will be much faster than the accumulation of debt, right? And then we'll resume the picture that we are seeing here, and again, come back to the 60% levels within, let's say, 10 years or so. So this is roughly speaking what I think is a realistic scenario.
Well, what's interesting is the United States entered this crisis already at 80% debt to GDP, so 20 percentage points higher than Israel. And it looks like, similar to the increase you just outlined for Israel, the United States will probably exit this crisis with a debt to GDP ratio of 100%. And so I guess my question also more broadly is, if I tie this chart here to the other one about the balance of payments. So if you go back to that, Gary, for a minute.
One more, yeah. Mm-hmm.
And it's really striking when you look at the early years of the state of Israel in the 1950s and 60s, just like you outlined, where Israeli exports were very minimal and import needs were great, and there was very little foreign currency to pay for those imports. And Israel made up for it, like you said. They had to accept restitution payments from the German government. That's where these Jewish charities in North America became very important, like the JNF and the Jewish federations that brought vital foreign currency to Israel. And you look at the situation today, and the Israeli government did a bond offering a few weeks ago. And one of the most striking things to me, and I'm interested in your comments, is Israel sold $5 billion in bonds. I apologize if there's noise. This is a part of the Zoom experience, sorry. They sold $5 billion in bonds at quite low interest rates to international investors, many of those investors in Asia, and one of those bonds was a 100-year maturity, which very few countries on earth are capable of issuing. Maybe give us some comments regarding Israel's financial position, its government fiscal position from that perspective, and what you think it tells us about what Israel's borrowing capacity might be and how it might utilize that borrowing capacity in other ways as we come out of the coronavirus crisis.
Yeah, okay, so your point is very, very well taken. And indeed, we are now paying something like 0.6% on our national debt, which on 10-year, right, maturity. I don't know for what rate the 100-year one was sold, probably something similar. Of course, if you think about the 0.6 over 10 years, this is a negative real interest rate. So, right, so in some sense, borrowers are paying us in order to take the money. This is indeed amazing, and all other indicators of the financial market concerning the riskiness of the Israeli debt puts us really at the top of the pile. We are, of course, below Germany, but not much below the United States, by the way. So the capital markets have great confidence in Israel. This is. I don't know whether I share this confidence as a citizen of this country, but what can I say? This is what the markets tell. Of course, one has to be careful, right? Markets tend also to every now and then to be wrong. There is a beautiful example that I show my students again concerning the interest rate gaps between the Greek debt and that of Germany prior to the 2008 crisis, right? The markets totally disregarded the Greek situation. There was hardly a premium on the Greek interest rate. So this is by the way of cautioning. I mean, let us not believe that markets know everything. But nevertheless, right, I mean, having said that, clearly we have great confidence. Now, we are cashing in, obviously, on these long years, as you said, of very, very prudent both fiscal and monetary policy. All of that, as I said, coming out of the 1985 economic collapse. So that's why, again, I want to re-emphasize this. Israel was refounded economically at that time. And that gave it this modern economic management sort of color, which enabled it also to join the OECD eventually, right? So all of that is part of the same story. So it is a modern and very well run, it used to be at least until now, economy. And this is what the world markets are sort of rewarding us for and continue to reward us for, believing that this will continue. So of course, like always, when you gain credibility, you have to be careful not to lose credibility. And this is, of course, where the danger is, right? Because money is very cheap right now. And it's being spent, I should say, sometimes recklessly. And there are big debates about what the government is doing right now. And of course, this is the danger that if it continues to be reckless or be moved by all kinds of political rather than economic considerations, then we may face a situation where markets say, wait a second, you've changed your behavior, right? And then, of course, we're going to start seeing interest rates going up and risk premium going up. Right now, this is not the case. And therefore, one has to use wisely, of course, this confidence, and the government has to indeed invest in the economy rather than just throw money away, which is, again, right now, it's a little bit what it is doing.
Let me ask you a question that ties together the debt chart that we looked at a second ago and the population chart, which is very striking. And one of the things that you mentioned, or at least highlighted, was Israel has the fastest growing population in the developed world. You had mentioned that the population is growing almost 2% per year. And if I were to compare that to the United States, for example, our population is growing 0.7% per year. And other countries like Germany and Japan are actually experiencing population decline. And so Israel is quite unique in that regard in the developed world. And at the same time, they cut their budget. The debt to GDP ratio, as we just outlined, was very low. And some of the expense, some of the cost of that low level of government spending was infrastructure. And Israel is facing a great deal of pressure to improve its infrastructure, in particular, transportation infrastructure, and at the same time provide housing. By the way, my calculation at Israel Investment Advisors is that housing construction all by itself will probably require $400 billion of investment in the coming decade. And there's no way that we're going to build that level of housing without improved transportation infrastructure. So let me ask you, one, do you share that perspective? And two, do you think that some of the potential for increased government debt can be or will be directed in that area?
Well, I mean, I fully agree with you, with your analysis. This is perfectly correct. I mean, as you said, Israel is extremely unique. I could have shown you this picture as well. So we have a total fertility rate. So this is the number of children a woman is expected to have during her fertile life is about 3, right? So this is, of course, the sort of break-even point is around 2, a little bit more, 2 point a little bit. So this is an extreme outlier, nothing even remotely close exists again, among OECD countries. So again, we can start asking the question, why is it like this? I mean, why do perfectly secular families, right? I'm not even talking about the Orthodox families that have 7, 8, 9, 10 children, right? But perfectly secular families in Israel that in Europe would have had maybe 1 child, have 3 children. So this is a phenomenon that I think is beyond what we are discussing right now, but let's take it as a fact. So of course, again, we have a very small area and a very rapidly growing population. You need to house this population, exactly what you said, and we need, of course, to provide everything else. So transportation for sure, right, which is very backward in Israel. Medical care, right? Everything, education for children, right? These children have to learn somewhere. So you need to build classrooms, you have to train teachers, etc., etc. It is endless. So the tasks are huge. Now, the point is that the government has not increased until now, or certainly not sufficiently increased civil expenditure in order to provide and enlarge the infrastructure. So the economy is now under huge pressures. So in particular, where the medical system is concerned, but also where housing, right? And therefore, housing prices here are unbelievably high, simply because there is a huge shortage. So this is government mismanagement purely, right? So the government doesn't release land for construction, exactly what you say, and doesn't develop the transportation infrastructure in order to enable efficient new housing complexes to be built. So all of that has to be taken care of. So I'm sure that's certainly right in the medical sphere, the immediate pressures are huge. So it's already visible right now because of the needs. But the pressures in the housing markets are mounting all the time. There will be no choice, right? It will have to be done. And also in, of course, transportation, we see some of it already in place, being constructed in the Tel Aviv area with a metro transportation system. A lot of reforms are still waiting to be enacted, but at least the movement is in the right direction.
In the last 7 or 8 minutes that we have together, Professor, there's a few specific questions from our participants, in particular about Israel's high-tech sector. And there's a general question regarding how much of the high-tech and knowledge sales in the Israeli economy are the direct results of defense-driven innovations And then somebody has an even more specific question. Intel is going to close one of its plants, and they want to know what the implications are for the broader Israeli economy.
Okay, so let's start with the second question. So this is going to be a big blow, no doubt. Now, how big is hard to tell. So it is a major employer, right? I mean, and in particular, it is located in Kiryat Gat. So again, in Israeli terminology, we discussed it a few days ago. This is called periphery, although it is something like, I don't know, 50 kilometers away from Tel Aviv. So right, so this is always very funny when one talks about it from the point of view of the United States. So of course, this is going to be a major blow. On the other hand, one has to always think about what happened when the aircraft industry, when the Lavi project, so that was a project of constructing an Israeli fighter jet, was stopped in the late 1980s. That was actually the beginning of the high-tech sector in Israel, right? So when all of these people were released from, now a little bit connected to the defense sector, right? From the jobs of constructing a military equipment, right, which is not very useful for civilian purposes, they started doing civilian things which could be marketed. So that was indeed the beginning of the high-tech sector in Israel. So maybe something like this will happen when Intel is releasing a lot of its workers, and they will very quickly find alternative occupations. So coming to the first question, nobody knows the answer. So there are, of course, various reasons for that. First of all, it is very difficult to assign and see how a particular invention develops from an idea that was developed in the army, or an idea that was conceived in the army, but what even developed in the army and then found its way into somebody's, startup, which ended up being successful. There were all kinds of studies that I saw, but that was already some years ago, trying to trace people who were known to be sort of graduates of the famous 8-100 unit, right, the intelligence unit, which is really sort of a training spot for these bright minds, being very creative and inventing all kinds of new things. So how many of them really became start-uppers, etc.? So obviously the data is a little bit incidental because the army doesn't release the data. So it's very, very difficult to follow in a serious way, how deep this interaction is. But everyone has the feeling that it is very significant.
As a final thought, I was struck by your population chart and your comment that the wave of Soviet immigrants in the 90s, almost 1 million people, were fairly easily absorbed. Obviously, with hindsight, we all remember the stories while it was happening of famous physicists on the street. But within a few years, most of these people were absorbed into the economy. And even though Israel has not yet caught up in terms of its GDP per capita, its level of economic development to the United States, nonetheless, if you think about 2% population growth each year, that's the equivalent of absorbing a wave of Soviet immigration every 5 years. So every 5 or 6 years, Israel now, just based on its natural birth rate, is absorbing the same number of people into its job market, roughly, that it did when that 1 million people moved from the Soviet Union. And if Israel can successfully absorb that 2% growth and maintain 2% GDP per capita growth, as it has, as you very clearly illustrated, since the 1990s, well, that's a rate of 4% growth. And if Israel were to do something to then close the gap with the developed countries, that would be growth on top of that 4%. So I guess my question to you is, when we look around the world, particularly the developed world, there is no other country that is growing 4% a year, none. So from your perspective, even though I understand there are some serious challenges, would you agree with that perspective, number one, or do you think there are things that will hinder Israel achieving that level of growth in the next 10 or 15 years as it did in the prior?
Yeah, that's exactly the issue. So, and thank you for this question. The problem is, it is a problem, I have to speak very openly here, is indeed I'm coming back to this ultra-Orthodox community, to the Haredi community. This is a community that refuses, for ideological reasons, to obtain, let's call them labor market relevant education. Which means, number one, that the labor force participation of men in this community has stagnated at around 50%. And women are participating at about 70%, but their training is poor in general. That of men, those 50% who do participate, is even poorer. And as a matter of fact, right, if that population, instead of being 10% of the total, becomes 30% of the total, as the Central Bureau of Statistics is projecting by 2050, then we are facing a problem. So unless, of course, something very, very serious happens with the acquisition of human capital, labor market related acquisition of human capital of that community. And this is a huge political struggle in Israel. So the situation as it is right now is not sustainable. With this particular population growing by leaps and bounds, and again, as I said, the 30%, the additional 20% percentage points that they are obtaining comes at the expense of the secular Jewish community. The Arab community sort of is stable, relatively speaking. So the question is, how do we cope, right? How do we create again, I want to use this labor market-oriented population out of that segment of the Israeli population. This is a big challenge. If this is not faced, then these growth rates cannot be maintained. And this is exactly what the Bank of Israel, by the way, is already projecting for the coming decade, let alone, right, in 20, 30 years from now.
Well, just as a closing note, I'm a little more optimistic on that particular issue, mainly because I feel necessity is the mother of invention, that the cost of living in Israel is quite high. The subsidies as a percentage of income are flat. And so therefore, as the cost of living goes up, there's more and more pressure on the ultra-Orthodox to get into the labor force. And so I feel a little more hopeful on that issue, but your point is very well taken, that could prove to be an economic bottleneck over the course of the coming generation or so. What I want to do now, since we've reached 9:30 Denver time, 10:30 East Coast time, 6:30 in Israel, we're going to let Professor Bental head to dinner and enjoy time with his family. And I want to thank you, Professor, very much for this very enlightening conversation, for your very long-term perspective on the Israeli economy, your very realistic perspective, and that is always appreciated. And it has notes of optimism as well as notes of pessimism, that hopefully some of those bottlenecks can be overcome in the future. And we very much enjoyed our time with you today. And before we go, I want to thank the American Society of the University of Haifa for this collaboration that we've had with Israel Investment Advisors over the last 3 weeks. Many people in America are quite familiar with the Technion, Israel's equivalent of MIT. They're familiar with Hebrew University in Jerusalem and Tel Aviv University. There's a gem sitting in the beautiful mountains of the Carmel in Haifa. And we've just had a brief little flavor, a taste of what's going on in Haifa at the University of Haifa and the tremendous talent that's available at the University of Haifa. So thank you very much to the American Society of the University of Haifa, and thank you again, Professor Bental.
Thank you.
And thanks to all of you out there for joining us. We look forward to having you join us again in future events with Israel Investment Advisors and the American Society of the University of Haifa.